Welcome traders, welcome to the Noob Shark channel and welcome to our very first video about funding rate. And believe me, this is a tool that it's not possible to be applied on the stock market and also not on the forex market. But if you are trading crypto and if you are planning to trade crypto, believe me, you truly need to know a lot about funding rates. You have to understand this because this might give you that perfect edge to beat the market. Okay, so let's see our intro and I come back in less than 50 seconds.
Welcome to Noob Sharks, the channel dedicated to provide the latest trading knowledge. Whether you're a beginner or an experienced trader, we've got you covered. If you're into cryptocurrencies, we'll keep you updated with the latest news and trends in the market. And if you're a stock, forex or commodity trader, we'll give you the edge you need to succeed in the market. Our focus is on providing quality education, so you can make informed trading decisions. So, if you're ready to take your trading skills to the next level, smash the like, subscribe, turn on the notifications and share with your friends. If you want to support us, you can donate your bats from your Brave browser or check the video description for great opportunities on affiliate links, donation wallets and our great merch store. Buckle up and get ready, we are about to start.
Well, as I told you before, this is our very first video about funding rates. So there's a very important playlist here. So you're gonna see that this is the one, but another video will come after this one. And the main idea now is to present you the funding rate, explain you the basis of it, and how to use the funding rate as an edge to open or close your trades in crypto market. Okay, important thing, this is valid for all time frames, though I'm gonna talk a little bit about the best time frame on video 2. Okay, I'm gonna talk about this. And okay, let's do the following. Let's go directly to the concept and then we come here. Please have in mind we are gonna use today the CoinGlass website. I don't know if you know it, but it's very simple. It's coinglass.com. This is the first page of it. And once we finish the explanation of the basis, we are gonna come here. Okay, by the end of this video, I want you to be able to identify very good traders based on the funding rate information. So come with me and let's think about one situation. Okay, let's think about a trader that is opening a position with $1,000. Okay, this guy went to the futures. Okay, I don't know what and I don't care which exchange, though I'm gonna talk one thing. Okay, today I use 4 exchanges. I use Binance, Bybit, Bybit, BitGet, and BingX. Okay, and there is a reason for this, and I'm gonna talk about this reason in the end of this video. Okay, first, just one thing: don't put all your money in only one exchange. That exchange might have a problem, might have I don't know, some withdrawal problems, or I don't know, we have the FTX history. So I use 4. You can use at least 2. And if you when I open an account on an exchange, please have in mind that in the description of this video, we have great bonuses. If you want, it's our personal link, our affiliated link. It's a little bit better than the average in the market. And consider about using them to have a cashback, airdrops, and great bonuses. Okay, but let's head up here. Think about a trader that is opening a position, okay? And this guy is going to use $1,000 margin, okay? The margin of the trade are going to be $1,000. But this guy will leverage this position 5 times, for example, okay? So the position size will be $5K, right? $5K. There is a second trade. There is gonna open a position with $500. Okay, an example. But this guy will leverage this position 10 times. So in the end, this guy will have also a $5K position size. And one more thing, let's think that this guy, let's pretend that this guy is going to open a long position, okay? And this guy will open a short position. First concept. There's a lot of people that says that there are more longs than shorts, more shorts than long, and blah, 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 blah. It is impossible, okay? Because every time that a human being or a robot programmed by a human being opens a long position, someone has to take the counterpart of this trade and open a short position. And this is based on position size, not on margin, right? Okay, so there will be never more longs than shorts in general, okay? Please follow our market sentiment playlist to understand the details, the very tiny details about this concept, okay? But let's start like this, okay? I have to have someone to take the counterpart of the trade, and this is quite obvious for a lot of people, but for some, it's not so obvious, right? Because the people say a lot of bullshit in YouTube, and you have the feeling that you can have more longs than shorts, for example, and this is bullshit, okay? But there's a big issue here, okay? On the perpetual futures, the exchange want to have a balance in the margins and in the position size. And the exchange has a lot of tools to do this. And one of the tools is what we call funding rate. So basically, what is the funding rate? Funding rate is a fee, okay? It's a fee, okay? That is paid directly between traders, okay? The exchange don't see the color of this money. This money doesn't go through the exchange. It goes directly from one trader to another. So it goes from longers to shorters, okay? And vice versa. Depending on what? Depending on the amount of margin in longs or shorts. So if there's a lot of margins on longs, okay, you have an imbalance on the contract, okay? If there's much more money on shorts than on longs, so you have an imbalance in the contracts. And the funding rate was born in order to try to solve this issue. How? If there is a lot of longers, so if there's a lot of long in the market, a lot of money placed on longs, okay, the funding rate will be charged from longers and will be paid to shorters. This way, to keep a long position open, it's gonna cost more money for the longers, okay? And to keep a short position open will be more profitable to shorters because they can have a profit, of course, but they will receive the funding rate fee from the longers. Got it? In the other scenario, if you have a lot of money into short positions, okay, the shorters will pay the funding rate fee to longers, and the longers will receive this money. This additional fee is made in order to disencourage people to open positions that are already full of money, okay? So the idea is, if there's a lot of money on longs, for example, and you have to pay an extra fee, you might think, I won't open this long. Or if your long is open, you are gonna consider probably close your long because the funding rate is an extra cost you don't wanna have. Okay? Great. This is the basis of the funding fee. Okay? Second step, think with me. Okay? You have the exchanges, right? And the exchanges make a lot of money from taxes, right? Okay? Market, taker taxes, maker taxes, when you buy, when you sell, when you open, when you close, and blah, blah, blah. But the good money of the exchanges comes when a position is liquidated. When you get liquidated, the exchange puts a lot of money into their pocket, right? So it's really good for an exchange when a lot of positions are liquidated, okay? So think with me, right? If you have a lot of money into long positions, what about make a very, very small manipulation, okay, to kill these guys and put their money into your pocket if you are an exchange owner, right? Okay, the shorters will make some profit, good for them, okay? But first, the profit of the shorters won't be paid by the exchange, will be paid by the longers that are closing their positions, okay? And they need someone to close the short in order to have their order filled, okay? And in the other hand, the exchange, once they liquidate the longs, they have money in the pocket to pay the profit of the shorts. But if there is a lot of, or much more money in longs, this gap will be very profitable for the exchange. Okay, and you can, of course, you can think the opposite. If there is a lot of money into shorting positions, okay, a small manipulation in the price and makes the price goes up, will liquidate it all. Will make all of these guys get liquidated. Some longers will have some profits because they are not the biggest players in the moment. Okay, so they're gonna have some profits. But the gap between the shorts liquidation and the shorts closing, okay, and the longer's profit will belong to the exchange, right? So why not make a very, very small manipulation and fool your pocket with money, right? So thinking this way, you have to find an edge, okay, and discover what do you have more in the market. Do I have more longs or do I have more shorts? Because if I have more longs, I want to go short because probably you're going to have some small manipulation to kill these guys. And I want to belong to the team of the shorters so I can have some profit. In the other hand, if there's a lot of money in the shorts, I will like to open a long because once the exchange will try to kill these guys, I want to belong in the price so I can have some profits. And how to identify this? You are going to identify this looking at the funding rate. Okay, so basically in crypto market, if the funding rate is 0.01%, is considered neutral. Okay, right? It's considered neutral. If this funding rate gets too negative, if it gets negative, it means that we have more shorters than longers in the market. Let me correct this. We have more margin placed in shorts than into the longs, right? So the funding rate will appear more or less like this. For example, minus 0.0, I don't know, 0.08. So it means money is on short positions, right? Sorry, English is not my mother language. If you don't get anything, please comment here. Okay, I'm gonna answer one by one. If for some reason the funding rate gets very positive, I don't know, maybe plus 0.02, it means that the money is placed on long positions and the market might drop a little. Okay, price might go down to liquidate these guys, and so I'm gonna search for short positions, right? Got it? Well, why a neutral funding rate should be 0, right? But I don't know why, because there's a lot of people that are believing that the crypto market's going to the moon and blah blah blah. 0.01 is considered a neutral funding rate, even though if you are in long positions and the funding is 0.01 positive, you do have to pay funding rate for shorters, okay? So this is a way to analyze the market, okay? Putting 0.01% as your zero line, okay? But if your funding rate is neutral and you are in a long position, you're gonna pay. If you are in a short position, you're gonna receive, right? Once said that, let's check our Coinalyze. So to check the funding rate here, it's quite obvious. You have to click here, funding rate. And please understand that this is the video number 1. You have to go through video number 2 and on to get all of the details of how to use the funding rate. Okay, so let's look at it. Okay, you have what I call funding rate matrix, and for now we are gonna focus only on USDT or USD margins, not token margin. Okay, there's a very small sentence here that shows us a lot. Okay, this is important. All rates are quoted into 8-hour rates. Okay, why? Most of the exchanges are charging or paying funding rates every 8 hours. Okay, 3 times a day. Okay, some of them are charging / paying this every hour. But in order to have a number where we can analyze, the CoinGlass make a calculation so we have the same rates in an 8-hour basis. Okay, it means that if the funding rate was charged per hour, the 8-hour is the sum of the last 8 hours. Okay, great, easy, right? So let's go on and on here, and let's see. At the moment, BTC has a funding rate of 0.06 on Binance, right? So this is neutral to bullish, right? OKEx is 0.096, so it's basically neutral. On DIDEX, it's positive. Okay, so when we see the funding rate on DIDEX, we might have the feeling that the price will drop. Bybit, it's negative, so we might think that the price will pump. Gate, price will pump. BitGet, price will drop. CoinEx, price might pump. It's not negative, but it's quite lower than 0.01. And we're gonna tell me now, my noob friend, this is crap, because with a lot of divergences like this, I cannot guess, because price cannot drop on DIDEX and pump on Bybit, for example. Price has a certain path to go through, even with some small variances from exchange to exchange. So let me talk here about a secret. What exchange has the biggest volume of the market? What exchange is the king of crypto market? Let's see if you know that. If you probably have the answer. It's Binance. Okay. So I don't care about other exchanges making a lot, but really a lot of backtest and front test. Okay. I realized that you don't need to look to any exchange except Binance. Okay. Price is going always in the direction to liquidated Binance guys. Great, right? But there is a special thing to look at the other exchanges, and I'm gonna talk about this by the end of the video. Do you remember that I asked you to consider having your account in at least 2 exchanges? And I'm gonna show you, not only because of the safety stuff and blah blah blah, but because of funding rate. Okay, it can be very profitable if you open your position in the correct exchange. Okay, but let's take a look at it. Okay, okay, so Binance looks neutral. Look at that. CoinGlass paints the numbers in red or green. So the numbers in red, it means that the funding rate is really positive. It means that there's a lot of money into long positions, and these longers might get liquidated. In order to liquidate these longers, the price must go down. That's why we have a red color. Okay, when you see a green color, you can see that the funding rate is negative, okay, or really below 0.01. Okay, that's why people are putting their money into short positions here. Okay, and in order to liquidate these short positions, price must go up, right? But forget all of this. Let's put an order on this and see from the biggest one to the lowest one, and we see BTC domination here has a funding rate of 0.02, so it's almost more than double of the neutral. Okay, but when we look at this, we might think BTC Doom might go down in order to liquidate all of these guys. That's my reading. Okay, so in order to open a position into BTC Doom, I'm gonna probably look for shorts, right? All of these guys here, they are not showing much. They are neutral, right? Let's check the end of this list. And look at what we have here. XXP, SXP has an extremely negative funding rate. Nice. RLC, extremely negative funding rate. It means that there is a big chance that the price will go up in order to liquidate these guys. We are looking to the number itself, okay? You have, okay, you have to do whatever you want, but you should look at the video number 2 because we are gonna talk about the funding rate trend. And this can give you a most powerful edge, but you have to understand this before talking about funding rate trend, okay? One thing that you have to keep in your mind, market sentiment in general and funding rate, they cannot be the windshield of your car, okay? When you look in front, okay, when you look ahead, this is the right way to say. When you are driving and you look ahead, okay, the price action is what you see. Okay, you see trend lines, you see Fibonacci, you see smart money, you see supports and resistances, edges, wedges, okay? And this is what you have to see when you look ahead. But before you decide to open a trade in a support, resistance, Fibonacci, order block, or whatever, you have to look into the mirrors before you make the maneuver, okay? Before you drive your car right, left, speed up, overtake, or whatever, okay? And the market sentiment is your mirrors, okay? I'm gonna short SXP. Let me look at my right mirror. It's my funding rate. Whoa, I cannot go this way because funding rate is really negative, and I might have a big loss if I short SXP now. This is the thinking, okay? Of course, video number 2, I'm gonna talk about funding rate trend, okay? Right? But by the way, think about like this. Think this is a knockout factor or not. If you, for example, are looking at the H bar, okay, and your price action shows that you can jump into a long position, you come and look into the funding rate. Okay, marketing is shorting H bar. I want to go long, and the funding rate is probably will give me an edge on this trade, right? Got it? And this is the right way to look at this number. And this is what can give you a great edge, okay, regarding funding rate and market sentiment, and make your price action trading much more powerful. Thanks a lot. I hope you enjoyed that. And please comment here if you have some doubts. And hoping to see you on video number 2 regarding funding rate.